What if I told you the biggest reason most businesses fail has nothing to do with their product, their marketing, or even their funding? Over 20% of new businesses are gone within the first year, and half disappear before their 5th anniversary. They fail because their foundation is built on sand. They miss the critical, behind-the-scenes steps that separate amateur, passion projects from bulletproof, professional enterprises. Today, you're not just getting a guide, you're getting the $1,000 consultation an accountant would charge you for, broken down into the 8 secrets that will determine whether your business thrives or dies. The journey begins with a name, but this first step is a clever trap. Aspiring entrepreneurs waste months agonizing over the perfect name, paralyzed by the fear of getting it wrong. But here's the secret they don't tell you. Your legal company name barely matters. You can register your business under a simple, generic name, and then file for a DBA, which stands for Doing Business As. This allows you to operate under a catchier, more marketable brand name. Think of it like this. Your legal name is your government ID, but your DBA is the nickname everyone knows you by. Don't let the name game stall your momentum. Pick the best one you can think of and move on, because the next decision is where most entrepreneurs crash and burn before they even start. This is where you build your legal fortress. You have to decide what kind of business you are, and this choice can either protect your family's home or leave it completely exposed. Your first option is a sole proprietorship. This is the default if you do nothing. It's simple and requires no paperwork, but it offers zero protection. There is no legal separation between you and the business. If the business gets sued or goes into debt, your personal car, your savings, and your house are all on the line. It's fine for a casual hobby, but for a serious venture, it's financial suicide. That's why most serious entrepreneurs build a fortress called an LLC, or Limited Liability Company. An LLC creates a legal wall between you and your business. It's a separate entity. If the business fails, creditors and lawsuits can only touch the business's assets, not your personal ones. It's the modern-day armor for entrepreneurs. But while the LLC offers protection, 2 other structures promise something even more seductive: massive tax savings. And this is where the choices get dangerous. The S-Corporation whispers a seductive promise in your ear: slash your tax bill and keep more of your hard-earned cash. As an LLC or sole proprietor, all your profits are subject to a brutal 15.3% self-employment tax. An S-Corp offers a legal loophole to reduce that. But this seduction comes with a hidden trap. To get those tax savings, you must navigate an administrative nightmare. You have to run formal payroll, pay yourself a reasonable salary, file quarterly payroll tax forms, and file a completely separate, more complicated business tax return. For a new business that's just trying to survive, this is a mountain of extra work and cost. And here's the brutal truth: the tax savings only exist if you're making a significant profit. If your business is losing money or just breaking even, you've signed up for all the costs and headaches of an S-Corp for absolutely no benefit. It becomes a wolf in sheep's clothing, draining your time and money when you need them most. But if the S-Corp is a trap for the unwary, the C-Corporation is a high-stakes gamble for the visionary. On the surface, a C-Corp seems like a bad deal. It faces double taxation, where the company pays taxes on its profits, and then you pay taxes again when you take money out. So why would anyone choose it? The answer is one of the biggest secrets in wealth creation. A C-Corp is designed for the big exit. If your plan is to build a company and sell it for a massive payday in 5 or more years, the C-Corp offers a golden ticket known as Section 1202. For qualifying businesses, this allows you to sell your stock and pay zero. That's right, 100% tax-free on your capital gains, up to $10 million or more. But this gamble isn't for everyone. This tax-free exit is specifically excluded for service businesses like law firms, accounting practices, and medical clinics. It's a secret weapon reserved for innovators in tech, manufacturing, and retail who are playing the long game. Before I continue, I'm Adam Invests, and I spend a lot of time breaking down money, compounding, and why so many people get stuck in the paycheck-to-paycheck trap. If you're serious about learning how wealth is actually built, not just wishing for it, make sure to hit subscribe and tap the like button if this video gives you value. Once you've chosen your legal fortress, it's time to make it official. And this is where countless entrepreneurs get ripped off. They see websites offering to form their business for hundreds or even thousands of dollars. Here's the secret. You're paying a middleman for something you can do in under an hour. The first step is to go directly to your state's Secretary of State website. Just Google it. There, you'll find a section to Form a Business, where you can file your articles of organization for your LLC. The fee is usually small, between $50 and $200, and in many states, you'll be officially formed in just a few days, sometimes even 24 hours. The second step is getting your Employer Identification Number, or EIN. This is your business's social security number. Third-party sites will charge you $100 or more for this. The truth? You can get it instantly and for free at the official IRS website, irs.gov. Don't pay for these services. You're smarter than that. Now that you're an official entity, it's time to build the financial moat that will protect your kingdom. A business bank account is not optional. It is the single most important rule of financial discipline. This account is the moat that separates your business kingdom from your personal cottage. Every dollar your business earns goes into this account, and every business expense is paid from it. Never, ever use your business debit card for groceries, and don't pay a business vendor from your personal checking account. Why? Because mixing funds is how you destroy the legal protection you just built. It's called piercing the corporate veil, and it gives lawyers the argument they need to come after your personal assets in a lawsuit. To keep track of this money, you need a bookkeeping system. It can be a simple spreadsheet for a new business with few transactions, or a software like QuickBooks as you grow. The tool doesn't matter as much as the discipline. Tracking your income and expenses is tracking the lifeblood of your business. With your legal and financial foundations in place, it's time to put on your armor. This means getting the proper licenses and insurance. This isn't just boring bureaucracy. It's about legitimacy and protection. A simple Google search for business license requirements in your city and industry will tell you what you need. Getting these licenses shows customers and partners that you are a serious, professional operation. Insurance is your shield. For a few $100s a year, you can get liability insurance that protects you from a lawsuit that could otherwise bankrupt you. Don't see this as a cost. See it as armor. It deflects attacks and gives you the confidence to operate without fear. A quick call to an insurance broker is a free consultation that can save you from a catastrophic loss. Finally, you must face the final boss of every business year, the tax dragon. How you file your taxes depends entirely on the fortress you built. If you're a single-member LLC, your business income and expenses are reported on a Schedule C, which is part of your personal tax return. It's relatively straightforward. But if you chose to be an S-Corp or C-Corp, you must file a completely separate, more complex business tax return. This is where you face your last great choice. Do you try to tame the dragon yourself with software like TurboTax Business, or do you hire a professional guide? Doing it yourself can save money, but one mistake could lead to a terrifying IRS audit or cause you to miss thousands in deductions. Hiring a good accountant isn't a cost, it's an investment in peace of mind and strategic guidance. They are the guide who knows the dragon's weaknesses. Starting a business isn't a single event, it's a series of strategic decisions. You've just learned the 8 that matter most. You now know more than 90% of the people who try and fail. The question is, which decisions will you make?